Well, welcome everybody to another informative session from the Singapore Mining Club. Remember, this is Asia's preeminent networking club for mining and commodity professionals. Promotes its members and the industry through networking opportunities and education. Now, while Singapore may not have any active commercial mining occurring in the country, it has a strong representation of mining, resource and commodity organisations here. Today, we are discussing the virtues of gold. Yes, that shiny yellow substance that has been the talk of interest in the last few years. We're privileged to have a cross-representation of participants in the industry, and each of whom are also members of the Singapore Mining Club. So with this, I'll just introduce our panel, and as I introduce them, if they can just, I suppose, raise their hand. So first we have Mr. Paul Sheriff. He's a portfolio manager at Fountainhead Partnerships. Now, Fountainhead Partnerships is a Singapore licensed fund management company that he co-founded in 2015, and the fund invests globally in secular growth opportunities, taking a 3 to 10 year plus view. Prior to Singapore, Paul worked in Australia with Morgan Stanley and managed global equity and derivative portfolios. And he has a strong interest in mining and resources, and as such is knowledgeable across multiple commodities, including gold. Next, we have Geoff McNamara. Geoff holds many hats, but one in particular is a director of an ASX-listed gold company, Tesoro Resources. He's also a partner with Medea Natural Resources and Medea Capital Management. He's a geologist with over 25 years of international resource sector experience, and he has worked as a geologist, project manager, and fund manager. He previously worked in private equity with assets under management of over 800 million US. And he was also a director of SocGen's mining finance team in New York. So his operational roles have been with companies such as Ivanhoe Mines, Lion Ore International, and Western Mining Corp. As I said, he's a geologist with a bachelor's degree in geology, but he also has a graduate diploma in applied finance. And he is also a member of the Australian Institute of Company Directors, and he's a member of the Australasian Institute of Mining and Metallurgy. Next, we are very proud to have Mr. Andrew Naylor, Executive Director and Head of ASEAN and Policy at the World Gold Council. Now, Andrew is the Global Head of Policy and Regional Head overseeing the expansion of the World Gold Council activities in Southeast Asia. So that's why we're very excited to have him here today. This covers Australia, Japan, Korea, and Southeast Asia as a whole. It includes regional market development, policy engagement, government affairs, and investment distribution, so very wide. His background is in banking and public policy, particularly in Asia. Now, the World Gold Council is the authority on gold. It is the market development organisation for the gold industry and works across all parts of the industry, from gold mining to investment. And their aim is to stimulate and sustain demand for gold. So it is great to see them as part of the Mining Club. And lastly, we have Mr. Naylor. He is the principal of SAMSO and SAMSO Media. Another geologist here with us of almost 30 years of experience. He's a strong background in capital markets, corporate finance, and the mineral resource sector. He's also been a previous founder and managing director of ASX publicly listed company, Saburan Resources Limited. And he's also been involved in several other ASX listings, providing advice, procuring projects, and helping to raise capital, which is always important. He currently operates a digital investment relation firm, SAMSO, supporting companies across a variety of business sectors to build valuable engagement with investment communities and customers through a unique series of compelling online interviews and insights. These interviews are Coffee with SAMSO, Rooster Talk interviews, and SAMSO Insights, and he provides a relaxed dialogue with participants to reveal insights that can trigger investor interest. Now, just for all you viewers, actually he doesn't have a virtual background. He is fortunate enough to be sitting in a beautiful part of the world in Australia. So that is a genuine background of the bush that you see there. I don't know if we'll see any kangaroos jump across or koalas fall out of the trees, but you never know. All right, let's get straight into it. Paul, I'm going to put you under the spotlight first. Now, gold has seen some recent record highs, and it has also had a recent considerable one-day drop, which got the attention in the news as a result. But one big piece of news was the Barrick-Berkshire transaction. Can you discuss this and what the major miners' CapEx budgets say about the near future of gold?
Thanks, Dale. Yeah, it was interesting to see Berkshire Hathaway take a position in Barrick. They bought $500 million worth of stock. We don't know whether they've had enough yet or not, but It's about 1% of Barrick. I mean, usually that sort of a transaction wouldn't matter, but being Warren Buffett and Berkshire, it does get people thinking, because over the past, Berkshire and Buffett in particular have shown a disdain pretty much for the gold industry or for gold as a commodity. I think referring to it previously as a pet rock. But I think, and the other thing to remember with a transaction like this and Berkshire being sub $1 billion, it's likely not even Warren Buffett pulling the trigger on it anyway. It's one of his portfolio managers. But yeah, digging down, I guess, into what Barrick looks like at the moment, you can see why a value-focused management company would be taking a look at these names. You've got to remember that if you've got $150 billion in cash, like Buffett does at the moment, then really you are restricted to pretty much Newmont or Barrick, both of which are $50 billion market caps. They're not going to be able to spread themselves down into the mid tiers. It's just not possible. They could buy Barrick and Newmont and still have $50 billion left over and change. So they are restricted there. But it's just interesting to revisit Barrick. And I mean, a lot of people probably don't look at it too much anymore. It's not really that exciting. But going over their recent guidance, they're producing at about 1,050 at an all-in basis. So at 1,900 an ounce gold, you're looking at free cash flow of could be $4-5 billion. So getting back to the value thesis, if you've got a business that's generating that amount of money on that market cap, you're talking about a 9 to 10% free cash flow yield, which, yeah, in the current market, it's pretty hard to find. So, I mean, it probably also shows just how much the market isn't really enamored with the sector. The disdain that the investment community still has for the gold sector is still real, and so you're not really factoring in. You're not seeing the market factoring in 1,900 an ounce gold at the moment, and even Barrick's numbers, their guidance is based on $1,300 an ounce. So there's a fair bit of upgrading that could be done, and if Berkshire's come in, then I think you're going to progressively see more and more generalists take a view on the market, and you are definitely seeing that. And I guess if you also take it a step further, you look at the mid caps, they're generating 12 and 15% returns on free cash flow based on market cap at these prices. So who knows? We might be set for a bit of a rally in the gold space. But I think that the next thing that caught my eye, looking at Barrick's guidance, was the tiny amount of capex that they're guiding for this year. So for the next 12 months, they've got a $400 million budget for new capex. To put that in the context of their current assets, it's about a quarter of their sustaining capex. So I think, again, what you're probably seeing here is a carryover from the industry, trying to get across to the major tier miners, not to go blasting all of their cash on marginal projects like they have in the past, and to keep a close eye on costs. So, I mean, Newmont's guiding for $500 million of capex this year, and they've actually got a runway to 2024 with zero. So you can tell they're not really putting any money into new developments. So I guess to finish off, looking at making money out of the equities going forward, if you're not burdened by $150 billion in cash, you can actually look at smaller companies. I think, as the cycle's done in the past, you're going to end up seeing pressure on these mega cap miners to do something. You can't just. I'm not expecting them to start paying out massive dividends. It's not in their nature. So eventually, you want to be, I guess, you want to be owning the businesses that are going to provide the new ounces and the new projects for these big caps. They're going to be able to leverage their lower cost of capital, and then they'll be able to generate higher IRRs than a mid-tier who's going to be burdened with a lot of debt and a lot of project finance. So I'd suggest that, and this is what we're looking at the moment, is looking for projects that could fit in the portfolio of a Barrick, and sitting tight and waiting for them to come in and pay too much. That's the strategy.
Nice strategy. And I suppose if they're generating that much cash, there's going to be the opportunities for them. Yeah. I suppose that perfectly leads us into having a look at the smaller end of town, which is very interesting, especially given the positions, I suppose, that you're looking at there, Paul, the juniors. So maybe, Geoff, we'll go with you next. And can you share with us some of the new developments or discoveries in the junior mining space, and I suppose the changes that are occurring in the market as a result, and perhaps the behaviours by the mid-tiers and the majors? You know, has anyone knocked on your door and asked if you're up for sale just yet, to go on with Paul's view? So over to you, Geoff.
Thanks, Dale. Great to be here. Yeah, look, I think it's an interesting dynamic that's changed rapidly this year. When we listed Tesoro this year on the ASX, it was quite a challenging market, and that transaction was executed in February of 2020. You know, we're now at the end of August, and what we're seeing is a very buoyant junior market where lots of capital is being raised, and even the IPO market has opened up again for junior resources company, and specifically in the gold space. That capital has enabled some new discoveries, and I think, you know, if we look at in Australia, you've got the likes of Bellevue Gold, De Grey Mining, and even Greatland Gold. So these are companies that are not necessarily new companies, but have had, you know, and a lot of these companies actually have had the assets in the portfolio for a while. But over time, they've now developed, you know, what you'd consider is very attractive assets for the mid-tiers and majors. You know, so Bellevue and De Grey, you know, both in excess of 2 million ounces currently. You've got a company like Greatland, which is listed in London, which is in a joint venture with Newcrest. That's an exciting new discovery. And, you know, you're looking at something that's quite deep deposit, 400 metres deep. They're in a joint venture with Newcrest to enable them to drill that out and develop a project. But we also have seen, you know, some other junior companies such as Predictive, who are active in West Africa. They've made, you know, an exciting discovery there. The company I'm involved with, Tesoro Resources, we've made a discovery in Chile. And even in the base metal space, you know, you've seen the likes of Chalice and Legend, which have been able to, you know, access the market, raise capital and make new discoveries. You know, so all those companies I've mentioned have, you know, done at least 1 to 2 raisings in the last 6 months, and some of them have, you know, raised pretty significant capital in the order of 20 million plus. You know, De Grey's a near $1 billion market cap company that is not doesn't have a producing asset at this stage. And yeah, I think the behaviour is modifying in the mid-tier and major space. And a slight segue away from gold, but, you know, if we look at Rio Tinto and their Winu discovery in the Paterson province, you know, it appears we've gone from this, you know, approach by the majors of, you know, we need 1 billion tonnes at 1% copper, to a smaller threshold, and, you know, smaller assets. So that asset, for example, has just under 500 million tonnes at less than 1% copper. But when you look at where that asset is, the joint ventures they're in that jurisdiction, you could actually see the potential for a hub and spoke type business where they build a central plant, and via their joint venture partners, they truck material to a central plant. So I think that's one, you know, significant shift we've seen in the mining space with the majors. You know, there are a few rumours around that Rio Tinto, you know, are now even considering gold for their portfolio. You know, that's to be tested. But I think, you know, going back to what Paul highlighted, we are seeing very strong balance sheets with the Australian mid-tiers, and we've already seen them active on acquisitions. Surprisingly, you know, most of those acquisitions have actually been offshore in North America. And as Paul said, you're now seeing the majors in North America and the mid-tiers replicating, you know, the Australian mid-tiers with cost discipline, generating strong cash returns, you know, starting to pay, you know, very modest dividends. But, you know, I expect we're going to see some more activity in that space. You know, we have seen Northern Star acquire Pogo. We have seen St Barbara acquire an asset in Canada. You know, I suspect there'll be continued transactions, over the next 12 to 24 months. And some of these juniors, as I've mentioned, De Grey, Bellevue, may well be acquired in the short to medium term. Thanks, Dale.
Thanks for that, Geoff. Yeah, it sounds quite interesting for those the juniors in the mid-tier space. And there's plenty of activity there, and something I suppose we'll come back to when we speak with Noel on that. For the moment, though, I'd like to go back big again. And as I said, we're privileged to have, as part of the Singapore Mining Club, representation from the World Gold Council. So, Andrew, for the education of our viewers, as that's part of what the Singapore Mining Club is all about, what is the role of the World Gold Council? And can you perhaps share with us the Council's views on recent gold prices, or price drivers, sorry, the outlook, and really, from what we've heard already, the investment case for gold, which sounds quite good.
Thanks, Dale, and thanks for inviting the council to join this. First of all, the World Gold Council, we're the International Market Development Organisation for gold. So we were formed about 30 years ago by the world's leading gold mines, and they formed us to promote the asset class, because they were very good at obviously promoting their own equity, but they needed to be an industry organisation that promotes gold bullion itself. So that's our overall objective, and we have three work streams, if you like. The first is on marketing and investment distribution. So we make the investment case to big institutional investors, central banks, sovereign wealth funds, pension funds, big asset managers. Where we go in, we have a number of tools that their portfolio analysts can use, but we make that case for investing in physical gold. So that's the first area of activity. We also have a stream of work that looks after ESG and sustainability issues. So we've recently launched the Responsible Gold Mining Principles, which aim to codify and harmonize how producers report their compliance with existing international standards when it comes to sustainability more broadly. We're also looking at the carbon footprint of the gold industry and gold itself. When you invest in gold bullion, the marginal externalities go down over time, because once it's mined and refined and sits in a vault, the ongoing externalities are quite low. So that's the second stream. The third stream, which is more where I'm involved, is on policy and market infrastructure. So we around the world, there are a number of investment barriers to gold. An example would be in Russia, where there's VAT at the moment on gold investments. You have other restrictions elsewhere, be it banking regulation, just the investment rules and investment climate. And the market infrastructure and policy team, they work to try and overcome some of those investment barriers, just to facilitate greater investment in gold. So that's sort of an overarching view of what we do. Obviously, this has been a great year for gold itself. It's been up close to 30% this year. That's obviously been driven by investment demand, particularly institutional investment demand into ETFs and similar products. What you've seen, though, is in the consumer side. So the big consumer markets are India and China. Collectively, they account for about half of consumer demand. That's been subdued for obvious reasons. When the price is high, consumers tend to buy less, so discretionary spend, but also we've had lockdowns which have physically prevented buying of physical gold. And you also, when you have that increased uncertainty, consumers tend to shy away. But investment demand tends to offset weaknesses in consumer demand. And something at the council that we talk about is gold's dual nature. You have consumer and investment demand. When you have times of increased market and economic uncertainty like now, that's a big driver of institutional investment demand. We're also seeing quite a lot of tactical flows and price momentum. And thirdly is the low and negative interest rate environment. So those are the three main drivers of investment demand. Something that we do, though, is to try and educate investors on the role that gold plays in an investment portfolio. It's well acknowledged as a safe haven, but it's not just a safe haven. So there are four key messages that we give. The first is that despite the lack of income from a gold investment, it does generate returns. So if you look historically, gold against other major asset classes has performed pretty positively. So that's the first reason. The second, it's a very liquid market. Over $100 billion of gold is traded every single day. In London's OTC market and COMEX and the various different trading venues, that's physical gold trading. 100 billion every day. That makes it larger than the UK gilts market. It's as liquid as some of the largest asset classes in the world. And then the final reason for allocating to gold investment portfolio is its diversification properties. It has a lack of correlation to other major asset classes. It performs very differently in your investment portfolio, so it's a good diversifier. And then taken together, that means it is a safe haven. It protects wealth in the long term, and it's a source of liquidity when it's needed. So that's sort of the investment case in a nutshell. We're often asked to forecast the price. That's something that we don't do, but we do have a tool that investors can use to come to their own forecasts on the future value of gold. It's on our website, and it's completely free to access. We engaged Oxford Economics and to come up with different macroeconomic scenarios, but investors can also put in their own assumptions about different factors that will affect the gold price. So long-term or real interest rates, China GDP. I mean, there's loads of different factors that you can model in and then come out with your own sort of house view of gold's future performance. So that's all on our website. Also, all of our research is free to access. Again, it's all on our website. We've created a hub, if you like. It's called goldhub.com. And that's where we host all of the investment financial services focused research and tools. But our main website, gold.org, it's all there as well.
What a fantastic overview, Andrew. I mean, I'm glad to see that the World Gold Council is taking that proactive view in regards to the ESG side of mining. And I don't think it's well enough known as to the positive things that mining does do in the communities in which they operate and globally. So it's great that the World Gold Council does support that. Impressive to see the liquidity of gold. And of course, yes, I was going to ask you what's the gold price, but I suppose we can direct members and viewers to the Gold Hub on your website, and they can have a look for themselves. And it sounds like a fantastic resource for people to get involved and I suppose diversify their portfolio with some gold in it. I know I myself actually looked at it, and I wish I had have actually invested more than I really did. But when I first got into gold, the price was $250 an ounce. So it's come a long way since then. So thank you very much, Andrew. That was great. Excellent. All right. So I suppose we'll just move along now, and we'll talk to someone who's actually on the ground and dealing with this. And with all this hype and the news around gold and such positive views on investment, I'd like to ask Noel to share with us how the recent gold price is creating a mineral exploration boom in Australia, or is it? I'd like to think it is. And if so, in particular, how Singapore, including the members of the Singapore Mining Club, could benefit from being involved. So Noel, could you share with us your views, please?
Look, the gold price by any means obviously has created a big hype here. I mean, I'm sure everyone who's in this sector will realize that every man and his dog's raising money, and ability to raise money is there. I mean, in 30 years in this industry, I don't recall a time where from, the Barricks, the Newmonts of this world down to, XYZ Exploration Limited is actually enjoying the same level of success. It's always been a time where everyone's like, oh, look, the big boys are getting all the attentions. Eventually it will filter down to this level. But I think this level, it's huge. I mean, someone mentioned about Belleville. Belleville just raised 100 million at $1 plus. De Grey's raising money easily. Even someone who's got a couple of postage stamps raising money. And we're talking, $1+ million to $5 million. So I guess the danger with that is what are you going to be investing in, or what are you going to be factoring in? And on top of that, you got to, at this point in time, thanks to COVID, we're getting a lot of new type investors. I'm getting a lot of feedback from the things I do, and these guys are coming back and they're looking at things. I'll give you an example. My chiropractor one session told me that she's just starting. The next 2 weeks later, when I was there, she was an expert. She was flicking ComSec and looking at 5 different stocks. So so who's actually the ones that's triggering the market? And as you know, every market's been running. So yeah, definitely the gold price is creating a lot of speculation and a lot of activity. Stocks are rising. You throw a dart, most things will fly, which again, as we all know, creates danger, because, you know, it's a good friend of mine recently, Rick Rule, mentioned, you know, when gold price runs, we're experiencing fear, and when the silver price runs, we're experiencing greed. And I think we're seeing a bit of both. Exactly, you know, there is still a lot of uncertainty with gold. So from the point of view of your SMC members, I think, you know, it's really important to look at the real fundamentals now. There's a lot of speculation happening in the market. Fundamentals, to me, even from, you know, I'm an exploration geologist from day dot, and we're always happy with speculation. Even I'm sort of treading water and figuring out, you know, what should be, you know, something that I should look at, you know, what I should be talking about in that sense. So yeah, I think the gold price has definitely created a lot of expectations. I mean, I'm involved in a listing at the moment, and late last year we were talking about 1,300, 1,400, and now we're talking, you know, hitting 2,000 US. So it's a big change.
Thanks for that, Noel. Yes, it's good to see there is some action on the ground and some positive light there for exploration. As I know, it does go through boom and bust, and especially with 2 geologists in our panel today, it's always positive for them to see that speculation going on. Well, wow, I'm quite impressed, as I always am when I have these sessions, and I'm sure you'll all agree. There's some incredible talent and extremely knowledgeable members of the Singapore Mining Club that we have here. So we hope all the viewers has given you an insight into what's happening with gold at the moment, and perhaps whet your appetite to invest in the industry. Check out the World Gold Council's website for some resources there and see what price predictions there are. So I'd like to thank all of our participants for giving up their valuable time today and sharing their knowledge, which they have generated over many years. But before I go, just a plug for the club. If you're not already yet a member of the Singapore Mining Club, then I encourage you to get online and do so today. You'll see at the end of this video the link. You will not regret it, especially when you get to engage in discussions with experts like we have here today, especially when we get back to having some of these face-to-face sessions. So thank you again, all of our participants, and everybody, please stay safe.